Peter Eliades with you. This is a Stock Market Cycles YouTube update going online Monday night, June 13th. We're starting you out on this page because this is part of our website. If you go to stockmarketcycles.com/register, we offer and have been offering free trials, free 14-day trials for our video commentary, which happens each trading day usually, or our TradeStation app, spectacular application, gives price projections, or a bundle of both of them together. Okay? And there's free trials available for all three of these. The free membership is, you're welcome to join, but you don't too often get too much on there, very frankly. We show you some indicators, some news stories, but these are the three that should be of interest to a person who's really interested in the stock market. These are free 14-day trials, no strings attached, okay? And boy, is this going to be an important 14 days coming up. Okay, that much having been said, let's start showing you some charts, both technical and cyclical things. Our last update was about 3 weeks ago, and we led you to believe that we were, at that time, close to a short-term bottom. That could lead to a rally. That rally could lead to another short-term decline, but our main emphasis was that the market was forming some kind of bottom, okay? We give these price projections both to the up and down side. In fact, the recent upsides we gave in the rally were spot on, and we never got further ones to the upside, which implied there would be another move to the downside. Well, we've seen that move to the downside, and we now want to show you what's going on projection-wise, because we continue to believe, as we have over this past couple of weeks, that the market's forming a bottom. I don't think we're there yet, but it's forming a bottom. Notice I say a bottom, not the bottom. The bottom is probably miles and miles away in terms of distance. That's my own personal feeling. But a bottom could be important, could last for several weeks, maybe even a couple of months. And I think we're getting very close to that. Let me show you some of the reasons why. This is a chart of the S&P E-mini future. It's a Globex chart. It includes Globex trading, okay? And I want to show you the technical pattern on this chart, okay? And notice it's trading now overnight. It's now 9:37 p.m. Pacific, 12:37 p.m. Eastern Time, and the futures are up almost 1%, okay? But let's show you what we showed our subscribers several hours ago in our evening update. One of the things is this potential channel on the S&P, okay? This is the all-time high on January 4th right here. So what we did was we drew a tops line from that all-time high on January 4th to the secondary high on March 29th right here, okay? So that shows us a potential slope to the downside. How many points are lost over what period of time? Once we have that slope, we can go back to the left here to one of the lows that occurred before the high in January. Okay, here's the January high. We could say that this was the important low before the January high. That was the low of October 4th, okay? Excuse me, September 30th. This was a September 30th low. It's slightly different on Globex than it is on the regular charts not including Globex. So on this chart that includes Globex, the bottom that we use occurred on, well, so let me zoom in on this. I don't know whether that's September 30th or October 1st. But we'll find out right here. Here it is. It's actually October 1st, okay? So it's right at midnight on October 1st, this low occurred. Midnight Pacific time. Okay, let's go back out again and take a look at this because this is fascinating. So here is the Jan 4th high. I connected it to the March 29th high, and then I brought a parallel line down to and brought it back to the low before this high. I should say a low before this high, because these are also lows before the highs. But a low, an important low, before this all-time high. And then look what happens. Drum roll, please. There's the March 29th high right there. Start coming down, coming down, coming down. Came close to that bottom line, didn't we? And then this is around where we did our last update and told you a bottom was forming. And indeed, here's the bottom right here, okay? Here's the good rally that we saw from that bottom. And then this top was formed. We got almost perfect upside projections for that. And then, wow, here's the decline we saw. Big decline today. And the S&P was down 151 points, over 3%, okay? But look at this. Look where it stopped. Let's zoom in on this for you. If you do this on a chart, by the way, that's not Globex included, look at this. One little bar beneath and then an immediate turn to the upside, okay? So what's going on here, you ask, Eliades? Is this it? Is this a bottom? Can we run in and buy now? Well, here's what I think, and I'll show you a couple of reasons why in a little bit. I think this is a momentum bottom, okay? I think this is a bottom in momentum right here, but not a price bottom. I think the price bottom lies out further in time. But I wanted to show you this chart and show you how we stopped virtually exactly on that line. In fact, let me show it to you on a 60-minute chart, 65-minute chart, an hourly chart for the S&P cash without overnight trading in Globex. Let's take a look at that. That's fascinating. Okay, here's the same type of thing. Here's the January 4th high. This is a 65-minute chart, my version of an hourly chart, because you have 6 exact bars in a market day. Look at this. January 4th high, March 29th high, bring it down parallel. And now I used 3 different bottoms here to parallel, and they lie virtually on top of each other. This one right here is October 4th. There's another one here on September 20th, and another one back here on August 19th, okay? But look how those lines, parallel to this line, brought up to this low, and this low, and this low. And when you bring them down, they look like they're right on top of each other. They form one broad line. Watch this. Look at this. Let me zoom in on this, because the one that I just showed you, including Globex, was really close to being perfect. This one, at least so far, has been perfect. Look at this. Exactly down to the lower of those 3. This lower one, by the way, is the one that was placed on the October 4th bottom. If those of you do your own charting out there and you want to replicate this chart. This is where we stopped today, okay? So that's what the technicals look like, and that's the argument for the potential of some kind of short-term market bottom here, okay? Now, for us, the most important thing is price projections. Let's look at those. Okay, let's go back to the area of our last update, which was right in here, okay, on May 23rd. We thought we were at a bottom. We had some slightly lower closing low projections, but we gave you parameters to watch that would invalidate those. And indeed, that's what happened. They got invalidated, and we made this up move. So this offset here on a 65-minute chart is a 42 to 48 offset. That's the equivalent of a 7 to 8 day offset on the daily chart, which leads to nominal 20-day projections. And look at this projection. We got this upside projection. We came right up into the projection window and then started going sideways, okay? Gave a small downside projection, but now we got this downside projection just in the last couple of days. So on this 1 hour chart or 65-minute chart, we have met downside projections at the same time as we came down to this exact lower parallel channel line. So under different circumstances, I could argue that this is a bottom right here. You've just seen a bottom. Another crazy thing, people will think it's crazy, is that it was a full moon. We're actually due for a full moon early tomorrow morning, okay? And sometimes, I know it sounds crazy, but go back and look at the charts. Sometimes full moons lead to at least short-term market turns. And I think there's a possibility that this one will do that, okay? So I don't know if we're going to get a little further to the downside first. This lower parallel channel suggests we're not. It suggests we may rally immediately. If we do, we have all this space in here to rally, okay, without getting new upside projections. We could get some shorter term upsides from shorter offsets. But we have this room to rally in here, and then I think come back and test this line maybe towards the end of the month with a lower low, but still on, perhaps on this lower channel line, and we get positive momentum divergences at that point, okay? So that's how this thing is setting up. The most important thing I want to impart to you is forget all the BS that you're hearing about. Oh, the S&P's down over 20% now. This is officially a bear market. So you have all the Johnny-come-latelys who were thinking I was crazy and I'm full of it because I was calling for the market to be topping in the fall and winter of last year, coming into November, which is when the Nasdaq 100 topped, coming into the beginning of the year when the S&P topped. Oh, yeah, you're calling for another top, Eliades, yeah. So those people that ridiculed that call for a top, now that we're down 20%, are saying, oh my gosh, this is a bear market, we better get out. Or, boy, we're getting ready to crash now. My work suggests no, there's no way to get a crash. At least projection-wise, there's no way to get a crash from here. I'll show you why. Okay, here's the S&P. This is now a closing price chart. Let's bring it back to a bar chart. Bar chart on the S&P. I have that same channel here. All-time high in January, secondary high in March, parallel to this bottom, this bottom, this bottom, all on top of each other, came down virtually exactly to it at today's low, okay? Let me, when I say virtually exactly to it, let me zoom real tight on this. Look at this. This is on the daily chart. On the hourly chart, it came exactly down to the lower line. On the daily chart, it came back almost virtually exactly to this upper line. But those lines, if you go back on them like this, look like one big broad line anyway. So we've come down to that. Why don't I think that we're getting ready to do some kind of crash or have a really, really big market decline from this point? This is the reason right here. These are nominal 2-year, they're actually 2-year offsets. The daily version of a 100-week and a 110-week offset, okay, that leads to nominal 4-year projections. Look how far away we are from them. And even the lower end of the S&P projection, which I think I showed you, let's say it comes down to 3,500, even 3,400, 3,300. There's no way that we have projections that take you below these lines. You move below these lines, and I think eventually we're going to do that further out in time. You move below these lines, and now you're talking about a big-time projection. You're talking about measuring from this high, January 4th high, coming down here. So a 4,800 to maybe, 3,300, somewhere around here. 1,500 points, like taking you down to 1,800 somewhere maybe. That's the kind of, now that's just off the top of my head. That's not a projection. But I think that's the kind of projection we're going to get out here in time. I think first we're going to see some kind of bottom formation here over the next week or two, then see ourselves a good rally. I don't know how long it'll last, but we'll be getting projections when it takes effect and hopefully be able to pinpoint the top. And then from that point, whether it's, if you use Fibonacci retracements, a 382, a 50%, a 618, which could take you all the way back to towards the top of this channel line. But from there, once we go up there and then get a loop projection to the downside, it could easily lead to prices below the lower of the two offsets, and that would generate a very significant bear market downside target, okay? But right now, no. I would say the maximum downside you can see here is 34, 3,500. I'll be surprised if we get that low because I've showed you the short-term projections that we have. So this is what we're looking for. I think there's a decent chance we saw some kind of very short-term low today, get a rally a day, a day or two, a week, I don't know, come back down again to a lower low than the one we've seen today, but less in momentum. So see where the RSI is here, well below the 30 level, and look at the potential divergence here on the MACD. The MACD is, even if it comes down here and turns around, you've got yourself a good potential divergence. So the bottom line of what I'm showing you is that no, this is not a time to be loading up on bear and selling short and thinking you're going to make a fortune on a crash. Those things may come, but I don't think they're going to come from these levels. I think we're much, much closer to some kind of market bottom than we are to any kind of market top, okay? So that's what I'm looking at. That's what the cycle projections are telling me. Okay, this is the NDX. Let's take a quick look at that because it looks a little different from the S&P. The NDX topped way back here on November 22nd, okay? And I threw in the same basic tops line with a slope, but it's slightly different in terms of what we use for a bottom here. On those, notice whether you use this low or this low, we have not yet come down to it. In fact, we have not yet come down to the projections, okay? The projections on the Nasdaq 100 call for 10,521 up to 10,935, rounded off. Let's call it 10,936. So I think if we do start a rally from here, although on the NDX it looks like you could get lower first before you start a rally. But if we start a rally, have the big move up, a nice rally up, and then down again and see the same type thing coming into the end of this month, into this projection window, that's going to be it. I think we're set up very nicely for it could be a very interesting and surprising rally in the stock market. Okay, I know I have a reputation with some of you out there for being a perma bear. No way am I a perma bear. I'm what my price projections tell me to be. And excuse me, but I think they've told me very nicely what's happened in the last 6 or 7 months. Back here, when we were calling for top, the market's topping, it's topping. No, come on, it's not. Well, down 20% in the S&P, and I think at around 30% on the Nasdaq 100. I'd call that some kind of top. So we're getting ready for the possibility of a pretty good rally. I'd say we'll see if we may have seen a short-term bottom in the S&P already based on that channel. But if we will see one in the next few days, we'll see a decent rally and a final move down into probably the end of the month into this projection box, and then get yourself ready for what could be a surprisingly strong move to the upside. And with that, I'm going to sign off. This is Stock Market Cycles YouTube update. Thank you for watching. Please take advantage of that trial that I showed you. stockmarketcycles.com/register. free trial. The next 2 weeks, they're going to be critically important weeks, I believe. That's it for now. Thanks for watching. We'll talk to you soon.